From Barangaroo Studios, the AusBiz COB is the key stuff you need to know about the day in business and finance.
Welcome to the COB. I'm Juliette Sarli. On a record reset day, we haven't quite got there on the close, but there was a record hit on the ASX 200 around 1:15, I think, and you can see there on the CBO 200 where we peaked 1617. The ASX 200 tracking around 50 points higher as we head into the close, so just under that 8,500 point level. We'll see if once trades settle, we manage to get there. Still a new 100-day high. There was weakness on US markets overnight after the Fed held the federal funds rate steady, but of course we have been seeing records being set, and European markets hit a record overnight as well. So getting into those themes, it really was about a record reset with some very solid moves coming through from pretty much every sector today, I think. Yeah, they're all higher. Energy, consumer discretionary, financial really leading the way. A little bit of rates reconsideration. Now that's not only from the Fed, how long are they going to stay on hold, but also we're starting to see some differing calls coming through here. NAB joining Westpac, CBA, ANZ, so becoming the last of the big four to move its rate call forward to February in light of that cooler inflation data we had yesterday. You've also got the likes of UBS, Citi, Deutsche Bank all saying February as well. And then of course we're always forward looking, so US GDP is the next litmus test for investors. After the Fed meeting, we're getting that print on America's economy tonight, our time. Let's have a quick look at those sectors. I mentioned that a lot of the consumer stocks were looking good today. The overall consumer discretionary sector up by 1.3%. Lovisa is of course a outlier there as it was hit with a class action. Also looking at the energy players, crude oil prices did fall overnight, but we have seen a good pickup coming through in energy stocks locally on the back of a number of those updates in the sector too. And then having a look at the banks, CBA is up 0.6%, nearing records once again, defying all the naysayers out there. Karoon Energy reported a 3% decline in fourth quarter production, but shares jumped higher after it announced a $75 million share buyback. Mineral Resources was also one of the companies updating the market today, saying it's on track to meet its full year 25 guidance. Zip, well, it fell quite substantially, 25%, $2.44 as we close. That is after its revenue margin slipped to 7.9%. Magellan down 8.5%. Veteran Gerald Stack to step down. And we mentioned Lovisa. Now it has recouped some of the earlier steeper losses, but it's been hit by a class action for allegedly underpaying staff, and that's going to go to the federal court. Welcome now to the COB, our guest Julia Lee from FTSE Russell. Good to see you, Julia.
Great to be here.
How are you seeing this market momentum as we hit records once again?
Oh, great to see the market hitting a fresh record high. So the ASX 200 hitting 85.15 points. So that beat the record that was set on the 3rd of December, which was just a point below that. But I think what we're really seeing is some tailwinds still coming through from the inflation numbers yesterday. The CPI numbers meant that, there's a more than 90% chance now that markets are pricing in that rate cut in February. And that really stirred along some of those rate sensitive areas, consumer discretionary especially. We know that mortgage holders have been doing it pretty tough. So that rate cut might help in terms of being able to spend in discretionary items. So the consumer discretionary area was a standout, and look, where we're finishing off at the end of the day is very different from where we started. If we have a look at where we started, we saw a number of sectors actually trading lower, and one of the ones in the morning which was trading down was real estate. But by the end of the session, we saw the property also turning a corner, and really all sectors finishing in the black. So nice to see that outperformance by the Australian market, given we did see the S&P 500 down as well as the Nasdaq down by 0.5% overnight because of Nvidia. And the other thing to note on the Aussie market is that it was really concentrated, the good performance in the big end of town. We have a look at the ASX 20 was up by about 1%, the ASX 50 up by about 0.9%. But then as we get down to the mid caps and the small caps, this is where we really saw the underperformance. So really the big end of town pushing its weight today.
Well, one underperformer that I mentioned was Zip, and we are starting to get these updates coming thick and fast. What do you make of Zip's numbers?
I remember Zip was the best performer in the ASX 200 last year, and it had this amazing journey where it started off the year at 60 cents and ended the year around $3. And that was a whole transformation around cutting debt as well as cutting some of the unprofitable international operations as well, which saw that massive turnaround. Today, of course, we've seen the results and we have seen a miss here. If we have a look at reporting season, it's all about expectations versus what's delivered, but then it's also about the outlook as well. So if we have a look at where sort of Zip has come in, what we saw was a revenue miss but higher costs. And this particular combination is not one that investors like to see. You obviously don't want to see that double whammy coming through, and we saw that coming through with Zip. Now, if we have a look at sort of the breakdown of the results today, what we saw was the domestic market, which is the majority of the business, being quite weak, and the US, where, you know, it's US, I think, was a bit of a bright spot where we saw strong US transaction and also customer growth coming back into that positive area. So if you're looking for a bit of a bright spot, it's the US, but unfortunately the domestic operations looking pretty weak. That revenue miss together with higher costs, you know, was down about 24%.
Yeah, absolutely, falling quite substantially. 244, I think, is where it was. Credit Corp also missing expectations. What do you look for when you look at a result like Credit?
Yeah, I mean, Credit Corp's a little bit of a different one. In Credit Corp, we did see missing expectation, but it did reiterate its guidance. So, you know, if you have a look at the big picture scheme of things, you'd think that things haven't really changed because they're keeping to their guidance that they set last year in July. However, when you do see a missing of expectations, what it does is it puts pressure in the business to do well for the rest of the year to be able to meet those expectations. And if you have a look at Credit Corp's core business, what it does is it goes and buys these debt ledgers. So essentially it's going to go and buy debt from utilities, from telcos, from the banks, and then it's going to try and collect those debts to repay that debt that it's already bought at a discount. But what it didn't do in the period that it reported, it didn't really buy any more ledgers. So it is still planning to buy ledgers. It says that prices should remain stable, but I think for investors, this is a sign of future growth. So just keeping a close eye. And while it did reiterate guidance, I think the risks are now that it really does need to deliver to be able to keep to those full year guidance.
All right, well, you mentioned some of the US earnings, and another busy night tonight. I think MasterCard, Intel, Caterpillar. What are you looking out for?
Yeah, I think the big one's going to be Apple tonight. The mega caps really doing their earnings parade.
I missed Apple on my list. How did I miss that?
Apple was actually going to come out after hours, so that's probably why. And I think Apple's going to be a big one because it is the biggest stock in the US now. And what we are in particular watching are those iPhone 16, 17 sales. We know that, you know, the hardware hasn't changed too much, so getting a read on the demand for Apple products, especially the phones, will be a key one. And given that we have seen some of those suppliers for those phones coming out to say, I think we saw Orvo, which is a key supplier to Apple, coming out to say its largest customer for FY26 is probably going to see flat to slightly higher revenue growth from that particular customer, which is most likely Apple. So, you know, it was interesting to see the share price reaction in that supply because initially it had beat expectations, so we did see the shares trading higher, but as we, you know, got more of its outlook, the shares reversed course and then went lower. So I think when it comes to this reporting season, it's not so much important what's happened in the past because in this particular case, beat expectations, but that weaker guidance was what turned the share price action around. And really, you know, share prices are a reflection of the future.
And tell us what you thought about the big DeepSeek shock and the big move in NVIDIA.
Yeah, I mean, we'll have to wait to see how it plays out. But initially, you know, it reminds me of what happened in the telecommunication sector in Australia. I mean, there are a few parallels and differences as well. But essentially, you know, here in Australia, what we saw was that Telstra was a monopoly. And then as competition came in, you know, it was the main player that saw the biggest negative impact. And if you have a look at the current large giants in the artificial intelligence space, what DeepSeek really does is it increases competition, and increased competition usually hits the largest players. So just watching to see how it sort of changes the scope of the market, but you know, overall it might be beneficial beneficial for artificial intelligence, the number of companies that benefit, the size of the market, the accessibility, but generally an increase in competition hits those incumbent and the largest of the players. So watching that carefully.
Yeah, and we're watching Apple as well. Thank you, Julia.
Thanks,
Lee.
Julia.
Julia Lee from FTSE Russell. I couldn't even read my own writing and I missed Apple, but of course a lot of the other companies coming through tonight as well. The stock of the day locally, Zip, Mathan, Sundaram, Deep Data Analytics, Mark Gardner from MPC Markets joined Andrew.
It's a high risk to play in a slowing economy. It's had a huge run, which is natural when we are in an environment where the US government is, historical high debt. It's pretty much every country around the world is running higher debt to GDP than they've, run in the last decade, if not ever. So in that scenario, there's a fair amount of debt in the market. Guess what? Consumers are doing the same thing. Credit card defaults in the US have jumped up quite a bit. In the smaller end, it's actually nearly a decade high. So in that context, it's not a surprise that bad debts are going to rise.
Look, it's been a good run. I don't think, the 20% is just taking some heat out of it. It was always, to hold prices today, it was always going to have to sort of shoot the lights out. So any blotch at all really was going to be probably a sell on this. So if you've been holding it, I'd be taking some profits, at least trimming half.
All right, let's have a look at the leaders and laggards on a positive session. Kicking it off with Karoon. We've mentioned their $75 million share buyback, sending shares up almost 8%. Emerald Resources, Paladin Energy, Boss Energy and Yancoal also are front runners today as we reacted to a number of updates coming through from companies, including Yancoal today. All right, let's have a look at the laggards today. Kicking it off with Zip, we just talked about that, and of course the fact that it missed on some of its metrics, sending its share lower. The revenue was a miss there. Credit Corp, we just touched on with Julia Lee, down 11.4%. Magellan, Star Entertainment and Clarity Pharmaceuticals. In the small end of town, these were some of the winners, including lithium stocks like Delta. And to the downside, I should say, here are some of the losers in the small end of town, including SPC Global. And that is going to be a stock pick that we talk about in the 11 o'clock show tomorrow with Stuart Roberts from Stocks Down Under. So it'll be interesting to get his take. Let's have a look at what we are expecting tonight. US GDP, of course, the weekly unemployment claims and the ECB monetary policy statement. But as Julia mentioned, it really is a lot about these earnings as well. So we've got Apple, Caterpillar, Intel, MasterCard, Southwest Airlines, UPS and Visa all coming through with earnings. Tomorrow, PPI for the December quarter, also private sector credit and a number of quarterly updates, including ResMed, Origin will be coming through as well. And Champion Iron. All right, we're up 0.5% there on the local market as we finish out the day's trade. The ASX 200 closing high by 0.6%, 46 points, 8493. So it did earlier hit an all-time high of 85.15 points before pulling back from that and closing below 8,500. Still, it's only 0.25%, I think, or thereabouts off its all-time high. We'll be back from 9:45 a.m. Eastern to wrap up all those big earnings, including Apple. So join us from then and have a good evening.